Hello, William here again. In this video, I'm going to explain to you the most important basic facts related to this trading technique. We will be focusing on chart analysis and how to read a candlestick chart. If you are not familiar with them yet, I will show you how easy it is to understand the candlestick chart, even if you've never heard of them before. There are two important elements to understand the method. First, candlestick charts, and Bollinger Bands, which is a system that indicates the right moment to enter a trade. Now, let's discuss the candlestick chart. You are probably familiar with the classic stock market chart. These are not very helpful, which is why professional traders mostly work with candlestick charts. A candle on a chart is related to a set amount of time, a time period which can be determined by using a broker. This time period can be set from 1 minute to a week or even longer. Interesting for us is when the stock lines move through a candle. This indicates to us a call to action, which will be explained in time. Now I will explain to you exactly how the candlesticks on the chart are created. Let's take gold as an example, and to make it easier, let's say that a candle represents a period of 1 day. At midnight, the gold price is $1,600 US. People have been trading all day long. Let's say it was a very active day. The stock price is first falling to $1,550 US. Then it goes up to $1,700 US, and then it falls again to $1,650 US. A standard line chart would look something like this. The price at the start of the period determines the bottom of the candle. The stock price at the end of the period determines the top of the candle. The highest point is the end of the top wick, and the lowest point is the end of the bottom wick. The wick shows us how far apart the stock price is from the entry point and the exit point. If the exit point is higher than the entry point, then we have a green candle. To make you a little bit more familiar with how they visually look, I have presented to you this diagram. If the exit point, which is the end of the 1 day fixed period, is lower than the entry point, which is the beginning of the 1 day fixed period, then we have a red candle. I hope that now you understand the difference between red and green candles, and how and when they appear on our stock charts. If you do not completely understand this, I would advise you to go back, take another look at the video, and make sure you're 100% clear on this. The candles themselves always represent a period of time between 1 minute to a week or longer. This means that once we choose the 1 minute chart, each minute there will be a new candle generated on the chart. A 1 week chart only has 1 candle per week. That's something that we use for long-term strategies. Now, let's continue. Let's learn now about our indicator, the Bollinger Band. I won't get into why they are called Bollinger Bands. What is more important for us is what we are going to do with them and how we can use this indicator perfectly. Today we are going to use the 1 minute chart as discussed previously. This means that every minute a new candle is created. And since we are working with 60-second trades, with the different colors of the candles, we can keep track of the amount of win and loss trades. Now for the bands themselves. They have been drawn into the chart and they show us the upper and lower average and the middle average. The stock price is always maneuvered between this tunnel. And we can see quickly that if a green candle is touching the upper line, a red candle follows shortly after. The same works the other way around. If a red candle is touching the bottom Bollinger Band, then a green candle will come soon. Knowing these two things, we have an idea on what the stock price is going to do next, and now we can bid on it. Go through the charts of the major currency pairs. Most important are US dollars, euros, Great British pounds, Canadian dollars, and Japanese yen. Now click on the currency pair in the professional charter. Choose the correct time frame, in our case 1 minute charts, and then choose Bollinger Bands. Now you have a picture that looks like this or similar. You can get an idea here what would have happened if you had entered a bid earlier. For example, if you would have made a bid here, you would have made a profit. Or if you would have entered here, you would have made a profit. It is also very important to observe the charts carefully. So when the time comes to make a trade, you know when that time is and you place the trade right away. As a general rule of thumb, if the green candle hits the upper line, we bid on a falling stock price. In the broker, we click on sell, put, or down. Depending on the broker you use, the name of the falling stock price can be different, but it always has the same function. If you have a red candle that hits the upper or lower Bollinger Band, then we bid on a rising stock price. So we click buy, call, or up. The amount to start with is always €5. If the trade is placed, you will see the clock ticking here, and you will see when the trade has expired. If the stock price is evolving correctly and the probability is very high, then you will make a profit between €2 and €4. The profit is different from currency pair to currency pair. In case of a loss, which may happen, we double the stake to €10 to make up for the loss of the first trade. In case we have another loss, we up it to €25, and for another one, we up it again to €50. The probability of this happening is very low. Take a look at the charts and see where the entry points are. Then count the candles until the stock price changes. You will see that it is rarely more than 4 candles, which is why it never comes to having to raise it to €50. A good tip to know, to avoid that you have to double the amount 4 to 5 times, is that you should always avoid the markets when they are opening. Therefore, 9 AM is bad, and 3 PM, or during the night when the Japanese market is opening, is bad as well. When the markets open, we often see short stock price fluctuations. These can provoke unbeneficial chart pictures. Simply wait 20 to 30 minutes, and if there are no fluctuations, feel free to enter. Often people ask the question why they shouldn't increase from 10 to just 20 and not to €25. The reason is that you already have invested €35 and therefore you have to get at least €37 back to stay within the profit zone. With some currency pairs, you will only get a profit of 75%, which is why from €20 you would only get €35 back. With this, you get no loss but also no profit back. These are small details that can add a couple of €100 at the end of the month. I hope you are able to understand my explanation on candlestick trading. If you are still unclear, I would advise you to go back and watch the video again. Click now on the banner below the video and get yourself an account from eToro if you do not have another charter yet. Get in there, begin! You'll be so surprised how easy this is and how fast you can make some great profits. I wish you a successful day and all the best. Sincerely yours, William.